Gold prices head higher midweek, closing as high as 1856 today. That'd be the highest close in about a week, trading at about a $16 range, down from 1846 up to 1862. And again, straddling that 1850 level price. Clearly, that's a level the market has become quite accustomed to. It's traded 1850 13 out of the last 14 sessions. So at this point right now, we're kind of seeing the market prices stagnate. We see a move higher, we see a move lower, but we do gravitate back to that 1850 level eventually. At least we have 13 out of the last 14 sessions. Now, what does this all mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you will notice that volatility has been trending lower, and it did again today. Again, we continue to trade in very tight ranges or tighter ranges, and we continue to trade at this 1850 level for quite, over 2 weeks. So at this point, market's going to need to see some kind of move away from 1850, a sustained move away from 1850, before it's likely that volatility will move higher again. Lastly, let's talk about the big event coming up on the calendar. That's June FOMC, a week from today. Expectations are the Fed will raise 50 basis points. We're going to hear about from the Federal Reserve Chairman himself. We're going to talk about the economy. I'll likely talk about quantitative tightening. But ultimately, it's going to be a growth versus inflation conversation. Yes, we already know inflation is high. We've seen it in pretty much every pricing mechanism that's out there. And ultimately, right now, growth components are now starting to come in lower than expected. We saw from the Federal Reserve Atlanta today that they put out their GDP now expectations. Second quarter GDP continues to come in with expectations below 1%, and that's after a first quarter which traded marked at negative. So ultimately, low growth, high inflation, which are both positive for gold prices. Gold isn't seeing the obstacle of higher dollar and higher treasury yields, which it historically has. So it's going to be a tug of war against those two, and it'll be clearly something the market's going to have to figure out, but ultimately we should get some answers a week from today, again, at June FOMC. So ultimately, gold prices continue to trade that 1850 level, waiting for that next catalyst event. Likely won't come tomorrow during the claims or the CPI number, but could come next Wednesday at June FOMC.